So you're a homeowner in BC whose mortgage payments have shot up dramatically over the last year, and now you have a property tax bill due on July 1st? Well, if that's a bit of a stress for you right now, I have John Chan here, and we're going to talk about something that might help alleviate some of those stresses that you have about paying that property tax bill, and also an aspect of it that might actually help you long-term financially. Hey, if you're new to this channel, make sure to go down below this video and subscribe so you get updated on new material and content as the real estate market changes so you can make the best informed decisions that you can. And I also do local area updates on different areas around the Vancouver and Richmond, BC areas. So I'm here with John Chan today, a wealth management advisor, and we're here to talk to you about a strategy that may help you in both the short and the long term financially, especially if you are a homeowner and those payments for your mortgages have gone up dramatically over the last little while. So John Chan, can you just give us a little bit about your background and your info?
Thank you, Jonathan. So I am a wealth management advisor, and I've been helping homeowners for about 10 years. I've been in business for over 10 years. And yeah, a lot of them have benefited from this strategy.
So John, everyone that's still watching right now, you are a homeowner, you've had mortgage payments that go up, and you got a property tax bill payment due on July 1st. And you may or may not be stressed with it, but this program might be able to help you, and if you qualify for it. So what is this program?
So the program I'm going to be telling you about is called the BC Property Tax Deferment Program. So I've got a few slides ready for you to help explain the program coming up right now. So as the name implies, this program is administered by the BC provincial government that allows homeowners to defer their principal residence's property taxes every year, as long as they own that home or until they pass away. So there are two ways to qualify. Under the regular program, you are eligible if you are over 55 years old, a surviving spouse of any age, meaning a widower, or if you're a person with disabilities. You need to have at least 25% equity in the home, meaning your mortgage cannot exceed 75% of the house's value. There's an annual simple interest rate on the deferred amount at prime minus 2%. You only need to repay all the deferred property taxes with interest upon a land title change, which is usually the sale of the home or when the homeowner passes away and gives it to their beneficiaries. Now, under the Families with Children program, you are eligible if you are financially supporting a child under the age of 18 or a child of any age with disabilities. You need to have at least 15% equity in the home, meaning your mortgage cannot exceed 85% of the house's value. There's an annual simple interest on the deferred amount at prime percent. Like the other program, you only need to repay all the deferred property taxes with interest upon a land title change, again, which is usually the sale of the home or when the homeowner passes away and gives it to their beneficiaries.
All right, John, thank you so much for sharing that. And again, this is a strategy where you are deferring your property taxes, which means that, okay, they're paying them at a later date. So at this point, if you've deferred and you've qualified and you're not paying that property tax this year on July 1st, what's happening with that money?
Great question, Jonathan, and that's actually where I come in, right? So I sit down with the individual to do a financial needs analysis to assess their situation, and typically, but not always, I recommend them to use the deferred property taxes money to put it into the premiums towards a life insurance policy that has accumulating cash values. Let me show you in a slide. Such a policy would make sure two things. One, if the homeowner unfortunately passes away, the life insurance payout would be able to cover the deferred property taxes with interest, plus a lot more to the beneficiaries. Two, if the homeowner lives a regular long life, the cash values accumulated through the insurance would be so large that it'll be able to cover the deferred property taxes with interest, plus a lot more to the beneficiaries. As a side note, you can also access your insurance policy's cash values early while you're alive, such as making extra retirement income for yourself. Also, you don't have to give everything to your beneficiaries only. And remember, creating this new asset costs you nothing out of pocket since the insurance premiums are funded by the deferred property taxes.
Awesome, John. Thank you for sharing that. And I think one of the best things about this strategy is that it is nothing out of pocket. I mean, especially right now over the last year, if you've been on a more variable mortgage rate, your payments have gone through the roof by comparison for your monthly mortgage payments. And now we're thinking about this additional property tax, but what if nothing was coming out extra out of pocket, but there was this potential long-term financial gain by not paying your property taxes right now, but maybe them going into something else to be able to gain a little bit more on the other side of it. So thank you so much for sharing that.
Thank you, Jonathan. And there's a lot more that I cannot get in depth, in detail, obviously. So, questions that's, different for every family, case by case is, what if you don't want to go through the insurance strategy I mentioned? Or what if you do, but you're not eligible for whatever reasons, right? So I think the best thing would be to contact one of us so that, I can sit down with you to do a complimentary financial needs analysis and kind of talk through your situation.
Awesome. Thanks so much. Again, it may or may not be right for you, but you won't know, and you won't know the specific details of how it applies to you unless you have that conversation. So go down below this video right now, click that link. John's contact info is there to be able to set up that session. If you get some value from this video, please make sure to like, to subscribe, and to click that bell so you get notified of future videos. And we release videos every single week on aspects about the real estate market and how to improve the future for both you and your family, as well as local videos about the greater Vancouver area and Richmond and the surrounding suburbs of what are the best areas to live, love, laugh, and play in.